Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, July the 31st, the year's 2023. Let's talk trading. Reasons for entry with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And it's the last day of the month, so let me just remind you. Always have your risk management in place. Never lose more in any one single trade than you're willing to lose. Walmal, you're going to give an answer to, I think it was Seeker asked the question.
Yeah, it's actually his handle was Limo 1985.
Oh.
Okay, but in any case, he asked on a particular video that we had done last week why you went short and why I went short. And I think you gave an answer already. And I think you went short because you were going for the pivot, if I recall correctly. The reason why I went short was because we had a return bar that was sitting out there like a candle or two prior to that, or actually the candle before it. It was actually candle one.
You might want to explain what a return bar is.
Okay, yeah, return bar being that, for me anyway, a candle that was much bigger than any other candles in the area. That's my definition of a candle. You actually put numbers to it. I don't put numbers to it. But if the body is much bigger than anything else in the area, I call that a return bar. And that way, and I do that on any time frame. 1 minute, 5 minute, 15, 30, whatever, it doesn't matter. If it's bigger than everything else around it, it's a return bar for me. Well, what happened was it closed and then it ran back. The next candle with the candle where I took the trade, it ran up and it tested the upper wick of that candle and came back down. And to me, it was sort of like, okay, this thing wants to go and try to run down to the open of that return bar. And so what I do is I entered just based on that reason alone. It wasn't a normal trade for me. I didn't have a flip-flop box. I was above my indicator, but that's all that was. But at the same time, I do know that return bars get filled, and if not filled, they get filled at least to the midpoint. And because the body of that candle was big enough that I could get to the midpoint and make 3 or 4 pips, hey, go and take it. Take the chance, go and take it, and just grab as much as you can, but then exit very, very quickly after that point, which is what I did. Of course, I think what happened was, if you go and look further onto the chart, I think what actually happened at that point in time was that it actually ran significantly further down. But I didn't know that was going to happen. Nobody knows that's going to happen. But I just look at it from the perspective of grab what I can and based on what I've observed in the market that happened in the past.
Well, I hope that answers the question for that one trader.
Yeah, and if people have other questions, just put them out there on the, either on the Facebook or the YouTube page, or and just put them out there, and we'll try to answer them in video. We like to go and answer them on the video itself, only because that way it doesn't just help you out; it helps anybody else that may have had the same question but just didn't ask it.
Right, and they don't go back and read all the comments.
Exactly. So we're sitting here on a very compressed day. We only got a smart range of 39 pips for the day. Percentile is showing 0%. It's shocker. But we've got no news. It's the last day of the month, so it wouldn't surprise me that all of a sudden, at some point in time, this day takes off, because last day of the month is usually some settlement that happened. But I think a lot of that settlement happened on Thursday and Friday last week after we got all that big news. We'll have to watch and see.
Right.
So, and even though we only had 39 pips for the day, the reality is you still can make your money. I mean, I've got 34 pips for the day, so I got 34 pips on a 39 pip range day. And you said, well, how can that be possible? Well, it's because I'm trading. I'm trading across, so I'm trading the travel of the day. I'm sure the travel of the day is, 500-600 pips probably. It wouldn't surprise me it's that far, but, and so, it's easy to go and do it that way. If I was swing trading, yeah, there's no way I could have made those type of pips, unless I got really, really lucky and picked the perfect top, perfect bottom.
Yeah, and I think I still must be half asleep because I missed a short entry. We were talking about reasons for entry. The previous H4 candle, let's see if I can get this cursor to give me what I need here. Had a low at 28.44. I should have been short at 44. That would have been worth 10 pips right there.
Yeah, there's an entry right here. Reason being is that we had a candle 2 on the 1 minute chart it's an up candle, then candle 1 is actually a down candle. We're below indicator 2. We've got a flip flop box. So there's all types of reasons to enter, but there's one reason not to enter, and that is going back to what's now candle 1, 2, 3, 4. It tested that area right at 33.4 and it got rejected. So, you could still go and enter the trade even now, even though that flip-flop box is a little bit old. But know that you're going into some place where we've had some difficulty before. The good thing about having difficulty before is that if it breaks it, it's a good chance it's going to break it for a bunch of pips. But for me, I usually don't take those trades because it got rejected in the near past, and I don't like taking trades where things got rejected in the near past. I look at more, okay, there's a good potential that we're going to be setting up a trading range here, so I just don't want to take it. And what happens a lot of times, I wind up missing out on some really good trades. That's part of my rule set, and you live with your rules. And here it's testing it again for the 3rd time in a row at the same exact area.
And we're making new lows and extending that range.
Yep, exactly right. So it broke it, and see, I missed out on that trade. But it's not my trade. For me, it's not my trade. I just don't like taking that trade. So I just have it as a standing rule. I don't take it. But if I would have taken it, I would have been up 3 pips at this point.
Right.
So, and you're exactly right, Tiro, because the thing is, the thing that was going for it is the fact that we had only 39 pip range. When we were talking at the beginning of this video, we're now up to a 43 pip range, and we're still in the 0 percentile. So it's generally speaking, it's not going to go and close here. Can it happen? Sure it can, but it doesn't like to do that, and that's you got to go. Not only you got to go pick your method, pick your poison, so to speak, and you got to stick to it. And then here it is. I would have been up 5 pips or almost 5 pips. And I could be really angry about it and everything else. But the way I look at trading is that it was a missed opportunity. You don't go and catch every opportunity. And what does that do? It just makes you go and look for the next one. See if there's a better opportunity out there for you.
Right. So, the funny thing is, had I taken that short, my target right now is 27.97, way down at the pivot. A missed H4 pivot from what was it, a couple days ago, back on the 28th. Yeah. So will it get there? Maybe, maybe not. But it's one of those things where if you can wait it out, you might be able to pick up, a bucket load of pips as opposed to a handful.
Right. And that's the thing, the way I look at pivot points is it's a magnet, and what I mean by a magnet is, your price is just a piece of metal going up and down, and the pivot point is a magnet. It's trying to draw it in. But the thing is, there are other things that are out there that are pulling it around, so it doesn't necessarily get there, when you expect it to get there. Will it get there? More than likely it will. you know, but it's not our timing as to when it gets there. And so for me, it's sort of like, if I'm going to go and play for the pivots, I got to go and have a mindset of, okay, I'm placing a trade here, I'm placing my TP down here, and shut off the machine because it's going to go through an awful lot of gyrations before it gets there, more than likely.
Right. And something I mentioned, I believe in yesterday's video. Let's see, do I have a chart that has it on here? No, I don't. Well, actually, in a way I do. The daily open, we're about ready to cross over that daily open. We're 2.4, 2.2 pips away from it. I think we might have just bounced off of it. Got a daily open at 348. At 128, 348, call it 35. And we're slightly below it now.
Yep. Yeah, your chart's a little bit different than mine, but, you know, that's the thing. I don't like to look at, like daily open. I usually put something a little bit of I make a block there as opposed to just a straight line.
You mean like the buy zone?
Yeah, exactly. Because because the thing is, your open and my open are, you know, we're looks like we're off by about 10 pips or so
Right.
each other, and that's, you know, and the thing is, again, if you're looking at it from the perspective of it likes to cross that area, and once it crosses that area, it likes to go and move away from it. That's what price does. It moves away from areas. And so, you know, once you get into that area, you put up like a little box there, and once it clears that box, then, you know, it tends to try to go and move away from it, and then it'll stop, and it'll actually try to go back to it again. And people say, well, you know, people get frustrated. Like, I was up 10, 15 pips, and then it went right back. Yep, it does that. So now you got two choices. You got to go and choose your method. So how are you going to play? Possibility number one is you just take your pips when you see that, and you see that it stops and starts going back to that area. Take your pips there, or, you know, look at it from the perspective as it goes back down. If it gets back down to the area, and you may now only be up like, let's say, a pip or so, and you look at it and you see it tending to go back the other direction and move away from it again, hey, this is a second opportunity to go in there again and, you know, and just get a second trade in there. You know, so it's, you know, those are decisions that, you know, every trade has got to go and make based on what their risk appetite is, what they feel comfortable doing. You know, those are all those type of decisions. I can't make that decision, you know, and you can't make that decision for anybody. That's a decision every trader has to make on their own.
Right.
And that flip-flop box down there in the bottom would have been really nice. And unfortunately, I was jibber-jabbering away and missed it all.
Mm-hmm.
But the entry would have been at 32 even. And now we could have been up, you know, 11, 12 pips.
Right.
But, and the thing is, you know, it's funny, if you go back, now back about 10 we don't have enough time, unfortunately.
Yeah, in fact, we're the fastest 15 minutes in trading is just about up. Now, something I mentioned quickly on the video from last night, I was talking about from 3-ball to 3-ball. You see, we put a 3-ball. You see how price came right back to the 50% level. It's just something observational. I don't have stats on it, but you know, so a reason to trade would be you see something like this and you start to trade, you know, look for that reversal. A reason to exit would be that 50% retrace. So remember, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.